Now, when you go down to your entry criteria, your main job is just simply to execute. So I'll give 3 tips for that. And what you want to do first is understand that you just want to do one job when you go to the market. Either you're buying or selling. You, as a beginner or an expert, you just want to narrow down and focus on one simple thing so that your mind can be sharp on what you can see. If you're focusing on buying and selling at the same time, yes, it's good for an expert, but for a beginner, you'll be confused at some point. So what you want to do is, if you're going to use the 4 hours for your direction in market, then you just want to know, what is the 4 hours telling me? Yeah, so this is Monday, 31st July. So I'm still giving examples. So the 4 hours is telling us that we're buying. If the 4 hours is saying buy, you want to generally understand if you should take it within a range or you should not take it within a range. Now let's go to the 15 minutes time frame. In 15 minutes, you can mark here as your level, or you can mark here as your level. Whichever one you decide is up to you. But what matters most is just understanding that once you mark a level, you're only doing one job. You are just buying. Unless that place is broken, that's when you can change direction. If that place is not broken, then you keep taking those buys. All right. For example, let's say price breaks this place and retests this level. That means the direction has changed. Or if price has not broken this place, then you should continue taking buys. You just want to have one job in your mind. Are you buying? And just be sharp with that decision so that you don't have confusing thoughts. You're buying and selling at the same time. Only experts that can do that accurately. Where for you who is starting or someone who is at intermediate, just stick to one direction. Now, you want your stop loss to be below the key level, especially the weeks of that level. Okay, we've explained how to find the level. These levels are just psychological. Me putting a level here doesn't mean someone who put a level here is wrong. It just means that I can identify that there's a new level here easily, while someone might not easily find that level. But wherever it is, you can easily identify for your level. You just want to know that price has failed to break a certain place for a certain number of times for a long period of time. All right. If that is so, then you mark that level. Okay. Some people call it support. But what matters most is the higher lows are where you take trades from, not the higher highs, the higher lows. When you mark the higher lows, you're interested in buying. Your stop loss below the key level and you execute the trade. If the trade is not playing out in your favor, you hold the trade until this place is broken. If this level is broken, that's the only reason why you should know that, okay, this trade is not in your favor anymore. Or you want to see that price does not break and does a fake out to continue going up. You want to see a clear break. The price breaks here and retests before going down, before you can even think of removing the trade. Okay. For example, let's say you have taken this trade and you identify that, okay, price is making a range here. So you want to wait for this range to give a clear direction before you take a candle. Okay, so this can be an entry criteria. Remember, I said you need to find your level. You need to choose a simple pattern, break and retest, whatever you want to use. But what matters most is just understand that you need your higher low or your lower high. Those are important. You need a simple pattern that you can really use to trade. Then you can understand that you need an entry criteria. I use more weak rejections. You can use momentum candles to show that the buyers are back in the market. And when you execute the trade, you're allowed to trade playouts. All right. So you want to go for 1 to 2, at least 1 to 3. Those are good risk to reward patterns for you. Right. So these are just backtest scenarios. So let me go to something much more simpler and still explain these 3 basic concepts. So like I said, you have to first start with the 4H. You need to understand that the 4H is, if you're a day trader, okay, it would be better for you to use what I'm teaching you. If you are a swing trader, you would actually need to follow the same concept, but use a higher time frame. If you're a scalper, you don't really need 4 hours, but still the same ideas. You will have to use 15 minutes for your direction and the 1 minute for your entry. But what I'm trying to say is still the same concept and ideas and principles, that whatever you're using, if you're using a higher time frame for your direction, so like me, I use the 4H for my direction, then you should just have one job in your mind. Are you buying or are you selling? And if the 4H is your structure and your direction, it means that you're following the market structure, not because the market is bullish or bearish, but because the structure of the market is actually saying that, yes, price is actually going to the upside, price is going to the downside. So this example we see here, price was actually ranging for a while, but now we can see that price has clearly made a direction for us to follow and it wants to go up. The 4 hours is telling us that for 4 hours, buyers were dominant in the market. So we want to go down to the entry time frame, the 15 minutes time frame. And in the 15 minutes time frame, like I said, your job is simple in the 15 minutes time frame. You're only just there to execute. You're not doing anything else but just execute and put your risk management in process. You're not to monitor your trades, because it will make you like it will confuse you if you keep monitoring your trade. Candlestick movement can manipulate you. But just follow the structure. First thing you want to do is mark your level. So if before it is telling you you are only buying, then in the 15 minutes, mark the current higher low. So the previous one was a lower high, but this one we want to mark the current higher low. And how did I find out this higher low? It's simple. You want to know that an area where price has failed to break for a long time, it's an important area. All these areas called higher lows are psychological. It's what me as an individual identify as a level. I'm not an institutional trader to know key levels that the market play with, but I use psychological levels where price has marked out for a period of time. That means if you count this 1, 2, 3, 4, 5, 6, 7, 8, so 8 times, so like for 32 15 minutes candles, then you're seeing that price has failed to break here for a long time. Okay, that's what you're saying. So now let's move. The next thing I have to do is the pattern we'll use. Want to know the pattern we'll use, okay? So like I said, sometimes London session has a manipulation around 6 in the morning. Well, not all the time, but you don't focus too much on the manipulation. What you want to do is look for a simple pattern. Look for a simple pattern. That's just the basic. And you can either just start with break and retest, or you can start with double top, double bottom, whichever pattern that is easy for you to identify. Look for that simple pattern and use it. Okay? Now, if you say you're only buying, when you start seeing sales, doesn't mean you should start selling immediately. All right? Now, for somebody, this will be a deep pullback pattern for him. This will be his psychological level. Like I said, all these levels are individual bias. It's not compulsory, you must be in a specific place. This can be a big pullback. What we're interested here is looking for a simple pattern you want to use for the next 1 year or the next 6 months. I would suggest just learn one simple pattern and follow it. And don't change time frame too often. Just stick to one time frame and understand that time frame very well. We're looking for either a double top or double bottom, or we're looking for a break and retest. So I'm not taking deep pullback, or if I was taking deep pullback, it would have been a good one to enter at this point here. Well, now I can see another pattern, and this is break and retest. This is the normal entry pattern that I like trading. My stop loss below the level, and you just allow the trades to run. Whether you win or lose, you follow your road. This is another entry. This is a double bottom. So I won't take another trade until my trade gets to 1-to-1. we'll talk about risk management later. But what you want to do is just have a simple entry technique and keep taking it. So if you didn't take break and retest, you can take this double bottom. All right. Then it ends up in loss. It is what it is. It can be profit. It can be what? Loss. You move on. You record your trades. Then you try again. What do I mean by try again? As long as this level is not broken, you can take another trade. Now let's see. Okay, you decide to take this. This is still a double bottom. So price has tapped this place twice. 1, 2. So okay, this is 2. Your stop loss below the wick, and you take the trade. So once you take the trade, then the next thing you're looking for is 1 to 1, you beat the trade, and so on. 1 to 3, it's your go-to. You want to take your profit at 1 to 3 at most. If you have questions, just comment below. And remember that it's a process, it's a journey. It takes time to learn these things. Just keep being patient with yourself, keep being disciplined, and you will get there.